Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings, so you don't have to. Today we are diving into Rivian's latest proxy statement, a document most people skip, but trust me, it's got some interesting surprises, especially if you're invested in Rivian because they are asking for more shares. So what's this proxy statement all about? Think of it as an invite to Rivian's annual meeting, combined with a detailed menu of what's on the agenda. Shareholders get to vote on important stuff, like who sits on the board, their accountant, and more. The meeting is in June, but the record date to be eligible to vote is in April. One thing to keep in mind, this is a preliminary version, meaning things could change before the final vote. First up is electing directors, the folks who steer the ship. 3 people, including the CEO, Robert Skerrin, are up for re-election. They want them to stay on board until 2028. Next, stockholders are asked to approve their accounting firm, KPMG. It's basically a formality but good corporate practice. Speaking of KPMG, let's peek at what Rivian paid them. For the past year, the fees totaled over $10 million. The bulk of that was for the audit, but almost $1.5 million went to tax services. That is quite standard for a public company of this size. One key thing, the audit committee pre-approves all these services, ensuring the accountants stay independent. This committee includes Karen Boone, Jay Flatley, and John Karfsik, so it's not a case of letting the fox guard the hen house. Here's a hot topic: executive compensation. Stockholders get an advisory, non-binding vote on whether they think the top dogs are getting paid fairly. It's a say-on-pay vote. Now for the big one, Rivian wants approval to issue more stock to Volkswagen. This is important because it could change who controls the company. NASDAQ rules say stockholders need to approve if a new issuance would give someone over 20% ownership or change control of the company. Rivian wants to be able to move fast on deals without waiting for a stockholder vote every time. This deal could be really big for Rivian. Why ask stockholders? NASDAQ rules. If they issue too many shares to VW, it could be seen as a change in control, which triggers the need for a stockholder vote. And so they are preemptively asking, if approved, Rivian can go ahead with the stock issuance to VW. But remember, more shares means existing stockholders' ownership gets diluted, which could affect the stock price. Let's zoom in on how this deal with Volkswagen will actually work. Rivian will sell them shares in stages. It's not like VW gets all the stock at once. It's tied to hitting certain goals, like financial targets and testing milestones. In the first stage, Rivian will get just under $500 million if a certain manufacturing milestone is reached. Volkswagen gets a discount in the first and last stages of the deal. Another proposal on the table, Rivian wants to increase the number of authorized Class A shares. Basically, they are asking for permission to create more shares of stock. This will increase the amount of available Class A shares in millions from about 1,900 to over 3,600. Why do they need more shares? To make the Volkswagen deal easier and have more flexibility for things like employee stock options or raising money down the road. This can hurt the existing stockholders, but Rivian promises it is for the good of the company. And while all that was happening, Rivian relocated their headquarters to a different location. They also want to protect their offices by changing their certificate of incorporation, similar to the way they already protect their board of directors. This is so they attract the best people to run the company and empowers people to act without fear of lawsuits. Finally, there is some cleanup on their certification of incorporation to make voting requirements more streamlined in the event of stock amendments in the future. Let's shift to corporate governance. This is all about how Rivian is run, who's in charge, and how they handle things. They lay out their guidelines, ethics, and committee charters, all available on their website. Independence is key, and they state that outside of their CEO, all board members meet the NASDAQ requirements for independence. It looks like all the directors show up to at least 3/4 of all meetings. Okay, let's meet the key players. Robert Skerrin, the founder and CEO, is of course at the top. And Claire McDonough is the chief financial officer. She's been with Rivian since 2021. Now let's get into how Rivian pays its executives. This section is all about the why and how behind those big paychecks. In short, their compensation is designed to keep the executives motivated and aligned with the mission. So how did they do in 2024? They are highlighting profitability in the fourth quarter and some environmental impact numbers. Here's the breakdown. The CEO got a bonus target increase, and they are focusing on performance-based bonuses. Their salaries are pretty standard for their position, but the focus is on performance bonuses and long-term stock rewards to make sure they are incentivized to succeed. One interesting move, they increased the CEO's bonus target, but actually achieving those targets would be difficult. The really big bucks come from equity, stock options, and restricted stock units. These vest over time, encouraging executives to stick around and think long term. Some of it is tied to performance goals. And while not specifically mentioned here, it's a theme that their employees should act and think like owners. This is why the CEO has large equity grants. And how does all this compare to the average worker? The ratio of CEO paid to the median employee is handed 2-1, which is fairly small compared to other companies and is not a big outlier. Here we get a look at how executive pay is tied to company performance. The summary compensation versus what the executives actually got. As you can see, the stock market is heavily influenced by whether the executives get paid or not. But of course, all that relies on shareholder return. This section makes it easier to judge whether the people at the top are truly making the company grow or just profiting off hype. The returns have been negative but are improving as the company shifts strategy. Alright, to sum it up, tell me I want to re-elect people to the board. ETA ratify KPMG as the accounting firm, approve executive compensation, approve issuing stock to VW if you approve amendments to the certification of incorporation, and also potentially adjourn the annual meeting if something goes wrong. What's my overall take? Rivian is at a pivotal moment. The VW deal is a game changer if they can pull it off. That vote for share issuance is CS critical to that. The executive pay seems reasonable given the focus on equity and performance. This year is going to be really interesting, so keep your eye on those deliveries, production costs, and any news about the VW partnership. Thanks for tuning in to Corporate Decoder. If you found this helpful, give us a like, drop a comment, and subscribe for more deep dives into the world of corporate filings. Until next time.